Okay, so today we are going to study the third module of UAE tax and regulation paper of the ACCA. The name of the module is business regulations. So the objective of today's module are we'll be able to describe the financial environment in which client operates. We'll be able to apply auditing skills to financial accounts of the company. We'll be able to explain the company laws requirement for auditors by describing the reporting obligations for financial accounts, trading activities, etc. We'll be able to also identify matters that audit report should address and cover, and explain the procedures for registration, deregistration, and retirement of auditors. So, among many other things, one of the regulations, business regulations, is consumer protection. So, what in your view is consumer protection, Mr. Mohan?
Consumer protection means like end user protection.
Any buyer has certain rights. Okay, so
Oh,
that those rights need to be protected. The buyer should not be misled, wrongful information, etc. Right? The promised quality should be provided, and
yes.
all that. Those are the rights. So that those buyers are basically consumers. So there is law on consumer protection. So this law is intended to facilitate what is the financial environment around um, consumer protection, what are the anti-dumping. We are going to talk about dumping. What exactly does that mean? Commercial registers, intellectual property, bankruptcy, etc. So, without a lot of details, one point we should remember: Ministry of Economy is the regulator in this. Okay, it's the Ministry of Economy which deals with the consumer protection matters and laws, even competition law as well. Let us go to the legislation of that. During 2007, there was as you can see, consumer protection executive regulations, with all executive regulations in UAE are passed through a cabinet resolution. Mr. Mohan, you should remember this, okay?
Oh,
What happens is first a decree law comes in, okay? That decree is issued by the president, which is later on ratified. You know what is ratification, right? Endorsement, acceptance,
yeah.
which is endorsed by the Supreme Council of UAE, Supreme Executive Council of UAE. So that decree becomes effective. But naturally, it's a decree law, and decree law is not very detailed. It requires further procedural level explanation. So for that purpose, sometimes, not always, but most of the times, there is a set of executive regulations that is also issued, and those executive regulations are issued by the UAE Cabinet of Ministers. Okay,
Oh,
so for this law, which you can see on the screen, which is Federal Law number 24 of 2006 on consumer protection. Later on, during the 2007 next year, one cabinet resolution was passed. Ministers of UAE basically they combined together and passed a cabinet resolution called Consumer Protection Executive Regulations. Okay, so main offenses under this law are unnatural price rises, product defects, how to deal with the product defects, and monopoly interferences. So we are going to address these further. First thing is unnatural price rise. Where do you live, Mr. Mohan? In Dubai or Sharjah or somewhere else?
Sharjah, Sharjah,
Sharjah. So you are aware that
Sharjah, sir.
in Sharjah, if you're living in a rented apartment, the owner cannot increase the rent for up to 3 years. You are aware of this?
Yes, yes.
right? This is a consumer protection action that has been taken by the Emirate of Sharjah. That may not be the exact same case in Dubai, but still, RERA does provide the maximum rent that can be increased. So this is consumer protection. So unnatural price rises are addressed in Article 3 of that cabinet resolution. The Ministry of Economy's Consumer Protection Department prepares studies and reports on any extraordinary crisis and conditions that the market, including determining the reasons for unnatural price increases. So, if there are unnatural price increases, the law provides how to address that. Department may call for assistance from any persons. It can be natural persons, it can be companies. The principles to be applied by the department when determining whether any price is unnatural, they are listed in Article 2 of the resolution. What are those? Some guidance points, reference points are UAE's inflation rate, the commodity and service prices in the previous periods, UAE's general price levels, neighboring states levels, neighboring states commodity reference, commodity and service prices. So you see the neighboring states have also been addressed. Average rise in commodity or service price inflation, foreign exchange rate of the commodity or price, and consumer complaints to the department. So all of these matters are considered while taking necessary actions for unnatural price rises. Okay. Then later on, during the year 2020, another legislation came. 2020 Consumer Protection Resolution extends the 2007 rules to cover the quality of goods and services, preserving the health and safety of the consumer while encouraging healthy consumption patterns as well. So there is a federal law number 15 on consumer protection. Uh, Article 3 of these 2020 Consumer Protection Resolution, it provides for law to apply to all goods. In other words, defined to mean every natural, industrial, agricultural, animal, transformative, intellectual, or technical products. Effectively, all sorts of products. Okay, as well as services, anything provided to consumer, whether or not without consideration. So, basically, it applies to all goods and services that are supplied within UAE, and that applies to free zones as well, by the way, and operations related thereto, and carried by supplier, in other words, defined to mean every juridical person providing services or who manufactures, distributes, or sells. Basically, the supplier, common sense meaning of the supplier, and advertisers and electronic commerce businesses. Advertisers, all juridical persons who by themselves or through others advertise. And then we have electronic commerce as well. E-commerce is on the boom in UAE. So this applies to e-commerce businesses as well. Consumer rights are defined in Article 3 of the Consumer Protection Resolution of 2020. Article 4, the rights are defined there. What are those rights? Providing an appropriate and safe environment where purchasing a good or receiving a service, obtaining correct information, educating and raising awareness, exercising rights to choose the most appropriate product and services. Consumers can ask questions, right? And it is a responsibility of the supplier to respond, truthfully respond, protecting the privacy and security of person's data. You buy something from a supplier does not have the right to divulge your personal information, your phone number to other advertising agencies. They cannot do that. Respecting the person's religious values, just and prompt settlement of disputes, obtaining fair compensation for damages incurred or money as a result of purchasing or using the goods or services. So there can be damages as well. So you can't simply deny that before delivery, if the goods were damaged, you have to compensate the customer. All other rights that have been provided under the law or any other rights added from time to time by the decision of the Council of Ministers. So in short, the consumer or the buyer has been provided a lot of rights for the fair trade. Uh, Obligations of the supplier, advertiser, and commercial agent. Now, three terminologies have been mentioned here. One is supplier, then the advertiser. If you recall carefully, in the previous section, the advertiser has been identified as a juridical person. Here, the natural person has not been mentioned. So it has to be a kind of a, it has to be a company. So obligation of supplier, advertiser, and commercial agent. It's an activity. Let us go through that. Explanatory information, which is in Article 7 of the 2020 Consumer Protection Resolution. Supplier, upon offering the good for sale, must place the explanatory information on the goods cover or package, or in a place where it is displayed in a clear and legible manner, and shall indicate the manner according to which it shall be installed and used. So when you buy goods, usually you get a user manual, right? And it has all the information related to the product. That's the first point. Supplier has to provide that. If the goods use is hazardous, supplier shall clearly state that on the packaging. Hazardous goods have to be clearly identified that this is a hazardous good. Price of goods and services. When offering the goods for sale, the supplier shall clearly place the price on the goods. This is a law. So you, for example, if you have published a book, you have to write the price of the book somewhere on the book in a conspicuous manner. Person should be able to read it. For that matter, any product, unless it is very impractical to do so. Um, so it has to be identified. So when you go to the supermarket for fruits, etc., vegetables, it may not be stuck on the fruit or vegetable itself, but the stand clearly identifies the prices, right? Supplier is to provide the consumer with dated invoice containing the supplier's trade name, address, type of goods, price, and quantity. The invoice is to be in Arabic. The supplier may add any language. So the default language in UAE, as per this 2020 regulation, is Arabic. But I think we all know that here in UAE, usually the invoices are issued in English itself. Obligation of the supplier to implement the warranty, which is article number 10, warranty. So what is the difference between guarantee and warranty? Mr. Mohan?
Warranty, they will repair and they will do. Guarantee means they will replace the product.
Yeah, so warranty can mean after sales service. It's not a guarantee to return the goods. So
Yeah.
supplier is to implement all warranties, including the providing spare parts and maintenance, replacing the good, or refunding its monetary value, and committing to after sales services. Guarantee has a very different meaning from warranty. Warranty may include refunding the monetary value or even replacing the goods. That's also warranty. After sales services, etc. So if supplier has given a clear warranty, then he has to comply with that. Supplier is to guarantee the service provided and that the good is free from defects and malfunctions within a period of time commensurate with the nature of that service. So if you buy a good from any hypermarket, you will see that they say that this is quality checked, it is stamped. So that means it has the quality of this is guaranteed. It will work. If it does not, then they would be under obligation to replace it or provide an alternative good. So that was the obligation with respect to warranties. Obligation of the supplier of goods and services upon discovering the defect. In the event the supplier discovering a defect or danger in the good or in the service which would harm the consumer when using it or benefiting from it, the supplier is to immediately inform the Ministry of competent authority of potential damages. So here there is a reason that this word has been written competent authority. That means in certain cases, certain other ministries, real estate regulatory authority might be the competent ministry, or bank. Okay, central bank is under the Ministry of Finance. So in that case, Ministry of Finance would be the competent ministry, or for that matter, those things which involve metallurgy. So the relevant ministry would be the competent authority. Also, the supplier is to immediately recall the good or service and announce that those products are hazardous. Malfunction of the good or service, which is Article 12. In the event of a malfunction found in the good or in the service, supplier is to repair or replace the good or service, or the consumer is to return the good and be refunded the price they paid, or the supplier should re-perform the service without charge. So that is that's the provision of Article 12, that in case of goods you have to either replace or refund the money, etc. And in case of service you have to re-perform the service without extra charge. Obligation of the good supplier is there in Article 15. The supplier is to stipulate in the contracts that he commits to repair, undertake, maintain, or after sales service, or to return, replace, or refund the price of the good within a specified time limit from time to time of identifying the defect or malfunction. The supplier is under obligation to keep the customers informed as well as the competent authorities informed. Commercial agent obligation. Now, what is an agent? Agent always has a principal. He or she is acting on behalf of another person. The commercial agent or distributor is required to implement all warranties provided by the producer or by the principal for the goods or services subject to agency. That's a very important point for us to remember. If, for example, here there is a shop called iStyle, which is the kind of the premium partner for Apple. So they are representing Apple in UAE. So if there is a product defect or anything, that agent or that distributor is responsible to make good that defect or default. The commercial agent will be bound by all the obligations of the supplier stipulated in the law. In the event that the service or good is, in the event the service or good is provided through the agent. Or they are also bound to provide either a similar good for the consumer to use without charge if the implementation of warranty exceeds the period of 7 days until those warranties are implemented. So, that's a great example. If they say that, repairing will take 7 days, so the supplier has to provide the alternative machine or equip, whatever it is, alternative goods they have to provide. Advertiser obligations, Article 17. The advertiser, the supplier, and the commercial agent are prohibited from describing the good or service in a manner which contains incorrect data and from making any misleading advertisement in connection with the good or service. That's the advertiser's obligation. The advertiser and the supplier and the commercial agents are prohibited from describing goods or services in a manner which contains incorrect data, so misleading information. You can't provide misleading information. Protecting consumer rights is addressed in Article 22. The ministry is responsible for enforcing the protection of consumers' rights in cooperation with competent authorities. And in particular, the ministry is required to establish or provide for education of the consumer and raising awareness on the available protection against the risks of goods and services. So basically, awareness raising is the job of the ministry. So Ministry of Economy in this case. Publishing of decisions and recommendations, monitoring the price movement, achieving the principle of competition and combating misleading advertisement. So if wrong advertisement is in play, ministry can stop it. Ministry will stop it. Receiving of consumer complaints. Consumers have a right to go to the ministry, relevant ministry, and complain about it. And Consumer Protection Association. There is a Consumer Protection Association as well in UAE. And taking the necessary measures to or referring them to competent authorities. A $1 million topic of compensation, Article 24. In breach of any of the obligations, the consumer can claim compensation for any personal or material damages sustained as a result of using the goods or services, or any agreement to the contrary shall be null and void. So, the agent or the producer, they are responsible for compensating any damages because of the use of the goods or services in case they were faulty or damaged. Damages resulting from the product's misuse or use contrary to the method of use are added to the compensation. So, you know, if there was a misuse of the product or advertised misuse, that so even that will be considered. Now, Article 25 addresses e-commerce. UAE registered suppliers working in electronic commerce must provide consumers and the competent authorities in the UAE with their names, legal status, address, licensing bodies, as well as adequate information in Arabic about the product or services provided. This is all applicable to e-commerce. So all particulars they have to provide, their registration details they have to provide, addresses, etc. And the language will be Arabic. The Ministry of Competent Authority is not considered responsible for e-commerce operations that take place through suppliers unlicensed inside the UAE. So that's a very key point for us to remember. And ignorance of law is no excuse. This is Article 29 of the Civil Transactions Law. So those people who don't even know that this is what the law of UAE says, they will have to face the music themselves. If they are purchasing anything or from e-commerce platforms who are not licensed, then it's not ministry's fault or government's fault. It's the fault of the buyer. They should purchase only from licensed e-commerce service provider. Applying the penalties stipulated in this law does not prejudice any more severe penalty. So, the simple meaning is that while penalties have been provided in the law, but depending on the violation, penalties can be increased. Imprisonment not exceeding 2 years, Article 29, imprisonment for a period not exceeding 2 years, and a fine not less than 10,000 and not exceeding 2 million dirham, or either of these two penalties, or anyone violating or failing to properly describe the goods, warranties, defects, malfunctions. If you did not disclose, basically concealed the facts, or you harmful nature of the product you did not identify, incorrect description, all of these cases, maximum penalty of 2 years imprisonment and a maximum monetary penalty of 2 million dirham. Minimum is 10,000 dirham. Either of the two or both will be applied. Imprisonment not exceeding 6 months. This is Article 30. So again, there is a possible imprisonment of up to 6 months and a fine which is not less than 3,000 but does not exceed 200,000, or either of the two. In case for on any violating or failing to obtain proper license, or creating a monopoly, or not conforming to the approved standard specifications. So, what is monopoly? The monopoly basically refers to one party controlling the entire market for a particular type of goods or services. So, if that is the case, then there can be a fine imposed of which will not exceed 200,000 dirhams, and there can be an imprisonment as well up to 6 months. Penalties can also apply if statements, advertisements, contracts, and invoices are not made in Arabic. So, Arabic language is a key thing, and further penalties can be obtained if you don't deploy Arabic while all this advertisement. Conviction of crimes, Article 31. The competent court, upon conviction of any of the crimes stipulated in this law, may confiscate or destroy the goods, materials, tools, etc. So all such goods or materials can be taken away, and they can be destroyed as well. Close the shop or place where the crime occurred for a period not exceeding 3 months. So you must have seen some shops getting, there will be a lock there, and a small paper notice would be affixed on that shop that this shop has been closed because of the action taken by the government. So that can also happen, but that duration is 3 months. Publish the conviction ruling at the expense of the convicted person in two daily local newspaper. The person who did these violations, it will be advertised in two major newspaper, and the money who will pay, the one who was convicted, who was at fault. One of them being in Arabic language. That newspaper, one of them will be in Arabic language. Imprisonment not exceeding 2 months. Must be, it is for a imprisonment not exceeding a period of 2 months, and a fine equivalent to twice of the market value of goods and tools, and tools, or either of the two penalties, or anyone failing to properly describe the goods, or anyone violating their obligations or warranties, defects, malfunctioning goods, after sales services, or commercial warranties. If you don't fulfill your obligations, in short, uh, they can be a penalty not exceeding 2 months, or a fine which could be up to twice of the market value of the goods. So that's it can be harsh if the goods are very, highly expensive goods. The penalties also apply for an incorrect description of the goods or services, etc. So this article actually we read before as well. I think this was in Article 29. Yeah. So somehow it seems similar. Let's go to the next topic. Until now, do you have any questions or any comments or feedback? Okay. You're there, right? You can listen to me, Mr. Mohan.
Mr. Altaf,
Yes,
can you
yes.
go to the previous slide? One second.
Okay. Yeah. Consumer.
Last article.
Okay. Sure. Yes. Which one? It seems to be a different article. Apparently, if you look at the end of this article, it stipulated in this law, Article 29. So that's why I was looking at it, why the exact same words are mentioned. So dumping, countervailing, and preventive measures. So let us talk a bit about dumping. What do you think is dumping? Anybody can tell me? You must have heard in some years ago, there was a lot of talk about China, that they provide or supply goods at extremely low prices. It is very, very difficult to compete with the Chinese goods in the market. So that we will find out that it is dumping, because there is a way through which the prices they cut down to like really eradicate the competition. Uh, in this lesson, you are introduced to anti-dumping rules, which are designed to preserve and maintain UAE national industry. With this knowledge, you will be able to better. Provisions associated with the consumer protection laws are the laws against dumping and countervailing harmful practices found in Federal Law Number 1 of 2017 on combating dumping and the countervailing and preventive measures. So, what is dumping? Dumping generally results in foreign business undercutting local business, leading to loss of business and employment opportunities. How does it happen? Under the Article 3 of the federal law, national industry or its representative may file a complaint against international trade harmful practices impacting the UAE and the consumers, either directly to the Ministry of Economy or through the relevant emirate governmental authority, which in turn refers to the complaint to the department. Alternatively, the department may initiate investigation. Basically, you can reach out to the government and say that, there are goods being provided by suppliers which are like extremely below market levels, and local businesses are just not able to compete with that. Uh, that will be addressed by the government of UAE. There's another name used for it in the management studies. It's called protectionism, protecting your own industry. So, let's look at harmful practice. Let us consider what is meant by harmful practice. According to the definition found in Article 1, the term is defined in Article 1 to mean practices involving dumping, ad hoc subsidies, and increases in imports. For example, dumping means exporting goods to UAE at an export price lower than the ordinary value for a similar product in the exporting country. So, for example, in China, some goods are sold at, let's say, $100. Okay, at a wholesale level, or at a distributor level, the pricing of the bulk commodity is $100 per unit. Same commodity, if China supplies to UAE at $60, this will be considered as dumping. So this is a way to, like, this will be very harmful for the local businesses, because if the same local business prepares the same good here in UAE, it may cost them much higher, and China may have a competitive advantage in that because the government is providing huge amounts of subsidies to manufacturers over there, so their overheads go down. Their cost of production is extremely low. In that case, they are in a position to sell that goods in domestically at $100, but they produce huge quantities which are more than the local requirements, and rest of the commodity they supply at throwaway prices to other economies. That is where the local business gets destroyed, because the local business, it is quite likely they will be manufacturing in UAE at $110. How can they compete with $60 prices that are provided by Chinese suppliers? That is dumping, basically undercutting of the prices. Subsidy means monetary assistance or any form of support granted by the government of the country of origin or a public agency therein to support income or prices. So that's what is happening actually. The dumping is happening because of the subsidy in China. Chinese manufacturers, you should know that China has supported their export business extremely well. So they have, like, provided so much subsidies over there that the manufacturers in China can produce goods at extremely low cost compared to the rest of the world. So yeah.
There are some companies who do the export. Their main base is just exporting products from other and selling it in the UAE market. So at lower prices, they were able to export. In that also, that will be a whole business is a halfway business.
Yeah, so the whole the see, that's where the doctrine of protectionism comes in. See, that is why countries like Saudi Arabia or UAE, they have certain programs called ICV programs, in-country value program. You might have heard. In Saudi Arabia, it's called ICTIVA. Similar. But the whole point is that every country tries to protect its own small business community, small as well as larger businesses. And in this particular case, if dumping starts to happen because of the comparative advantage of a nation, which has that extraordinary advantage available with them, then it will become very, very difficult for the local business of the other countries to sustain. So the country protects their own business. That's the reality. The reality is that if you look at purely from a business perspective, it will always be profitable for the local buyers to purchase the Chinese goods. So, but then that's where the UAE government steps in. They say that we are not only looking out for the interest of the buyer, but the local business also. That's the concept of that's the concept of protectionism. Okay, so let me read again. Subsidy means monetary assistance or any form of support granted by the government of a country of origin or any public agency therein to support income or prices according to Article 16 of GATT Agreement 1994. This is a famous agreement on tariffs and trade, which happened in 1994, and that's where the definition of subsidy was provided in the interest of the recipient of the support. Increase of imports means the importation of a product in increasing quantities in absolute or relevant terms in order to the production of the national or Gulf industry, and under conditions which may cause serious harm or threat to the national or Gulf industry. So think of it this way, like take any particular commodity, electronics, for example. Now, if those electronic goods are being manufactured in UAE or Saudi Arabia or in Gulf, right, and their cost of production is higher, what will be the what will the normal importer or businessman do? The trader will do. They will always go for importing it from China. So the local manufacturer of those electronic goods is going to definitely be damaged. And you will see a rise in imports into UAE. Why? Because every electronic good will be imported from China. So if that happens, UAE can or the country in question can take a measure or impose quotas, import quotas, that okay, for this particular good, this much amount of import quota is available, and that's it. So quota system can be brought in to control the imports. Countervailing measures. If harmful practices can be proven, then countervailing measures, in other words, effective penalty or rectification measures, may be taken. So basically, correction measures can be taken by the country. Article 5 stipulates that countervailing measures may be taken when it is proven that the goods under investigation were received at exorbitant prices. Goods under investigation were received at exorbitant prices, or that an ad hoc subsidy has been given for them, and that one or the other caused material damage to an existing national industry. If it is proven that the national industry is being harmed or threatened, then there will be an action taken by the government, or that there were intended to cause material delay of establishment of national industry, and that there is a causation relationship between them. So because of the subsidy, imports increased and national industry was being damaged. That's the first, scenario. Or it is proven that the subject matter of the investigation was being delivered to the national market in increasing quantities, either in absolute or relevant terms, and under conditions causing serious harm to the national industry, which produces similar or directly competitive products. So foreign industry was basically beating our local industry. That's or threatened to inflict such harm, and there was causality, and we can establish that a foreign industry or foreign suppliers were damaging the local industry. In that case, government will take corrective measures or impose penalties. So what kind of forms or measures will be taken? Article 6 addresses that. There are imposition of anti-dumping fees and final countervailing fees not exceeding the dumping margins or the final subsidy amounts. So dumping, what would be called a dumping margin? Maybe perhaps that would mean that the average market price of a commodity that would be supplied locally would be, for example, let's say $100. But because of dumping, that is being made available in the UAE at $60. That $40 would be the dumping margin. Compared to benchmark price, the dumping price will be much lesser, right? So that margin can be imposed as a penalty or as a dumping fee, anti-dumping fee on the supplier. Charges or adoption of temporary guarantees to fight dumping or ad hoc subsidies. So temporary guarantees can be provided by the government, not exceeding the dumping margins or the tentative subsidy amounts. So, these are also measures that can be taken. Temporary guarantees can be provided to fight the dumping margins. Final preventive measures against the increase of imports in the form of fees or quantitative restrictions. As I mentioned, quotas, import quotas. There can be import quotas that are put, or fees may be put, that if you want to import, such and such fees will apply. So naturally, the persons importing the goods, they will be afraid. They'll say, oh, what is the point of importing from China? Because even if I import at low value, here I will have to pay to the government that amount, the dumping margin or import fees, and I will end up incurring the same amount of cost. they will lose interest in importing the goods, and that will give rise to the local industry. Imposition of temporary protective fees against the increase of imports for a maximum period of 200 days. So, for a small duration of time, some protective fees can also be imposed. So, in other words, the overall discussion tells us that the attraction to the importer will be taken away by the government, because importer wants to import goods at a very low price so that they can maximize their profit margins, right? So what will government do? They'll say that we will take away that attraction of import. So you will find no difference between importing or buying locally. Let us talk about UAE sanction rules. In this lesson, you are introduced to UAE's rules intended to sanction an individual or a company and freeze the assets of that individual or company. Let us have a look at that. Supreme Council for National Security Mandate, Council, Article 2. So there is a Cabinet Resolution number 74 of 2020. The Council's mandate is to establish one or more local list, where it proposes the listing, delisting, or relisting of terrorist persons and organizations, and updating the list, whether spontaneously or upon the request of another country. So it's a list. Basically, criminals or other high risk persons are listed there. It can be natural persons, it can be companies. So and coordinate with other countries. It can happen by other countries providing information as well. So some country can come to can approach UAE authorities and say that this is a criminal and they have a larger network around the world. So you should include this name in the sanctioned list. Propose the sanction committee. Propose the committee the listing of terrorist persons or organizations on the local list. So this council, basically this is a Supreme Council for National Security Mandate. So this council has these different jobs. They interact with the international authorities. They maintain that sanctions list, and they also propose to sanctions committee the listing of terrorist persons or organizations on the local list. They also submit requests for delisting terrorist persons if they have reason to believe, if they have evidence that this name should no longer be on the terrorist list or sanctions list, they can remove it. When it believes that the terrorist person or organization do or no longer meet the designation criteria, while taking into account procedures and criteria set out in the relevant United Nations Security Council resolutions. So they follow the UNSCR, to get guidance on whether it is appropriate to list someone or delist someone. Conduct regular reviews of the local list in coordination with the Ministry of Justice. That also the council does. Grievances against decisions to list on local list. So some person can be by error can be listed as a sanctioned individual or person, right? So that person can go to the authority and say that this is a mistake. My name should not be on this list, or my company's name should not be on that list. Listed person, in other words, a person or organization listed by the UN Security Council on the sanctions list, or listed by the cabinet on local list, as the case may be, may submit in person or through a legal representative a written grievance application to the executive office of the committee for goods subjected to import and export control, attaching all the documents supporting the grievance. So there are steps provided. The office shall refer the grievance to the council. So naturally in UAE, there is that Supreme Council for sanctions. So that council is going to review first of all and examine. Both the office and the council can request clarification. They can ask for further information. What will be the next step after the review? The council receives the grievance application, verifying whether it is new or recurring, and may reject the application if it was recurring and did not include additional information. So it can reject also. If the council determines the information or evidence regarding the listed person is such that the person no longer requires listing, and once it has confirmed that the reasons that called for the listing are no longer exist, council will remove the name. Council must notify the Ministry of Presidential Affairs. The minister then submits the grievance application along with the council's opinion to the cabinet for the cabinet to decide to either approve or reject the grievance. So it is the decision of the UAE Cabinet of Ministers. If the cabinet approves the grievance, the listed person's name is removed from the list. So who is the ultimate decision maker in this particular case? UAE's federal cabinet of ministers. They will remove the name and freezing of the assets and all the other measures. They can, they can revoke that. If the grievance is rejected or if a response is not received within 60 days from submission, the applicant can appeal the cabinet's listing decision in the competent court within 60 days from the date he or she was notified of the rejection or from the expiry of the response period. So the key thing to remember is somebody reached out to the council saying that please remove my name. And in 60 days, no decision was taken. Then what will happen? After 60 days, the person can go to the court, first of all. Let's say a decision was taken and it was an approval decision. Okay, fine, we feel that you are right. Then naturally that person is happy. But what if there is an adverse decision saying that no, we still believe that your name should be on that list? This is a rejection case. In case of rejection, again, after the decision, the person has 60 days to contest that decision in a competent court. But if the court also decides, then whatever decision the court provides, that cannot be appealed. That will be the finding. Step 5, if a grievance is rejected, a new grievance may only be submitted after 6 months. Another very important aspect, 6 months duration is the cooling off period. After that, you can apply again, unless the president of the court approves. An appeal, step 6 is an appeal against a listing or relisting decision cannot be accepted before a grievance against it is filed and rejected. So while you already had a previous application, a new application cannot be made, a new appeal cannot be made. So the previous one has to be decided upon. Proposal for listing to be listing to the sanction committee, Article 10. If the council is satisfied there are reasonable grounds or sound basis to suspect or believe that a person or organization meets the designated criteria for listing on the sanctions list, council may unilaterally and without prior notice propose listing on the relevant sanction list of any person or organization by submitting the proposal to the Security Council or the concerned sanctions committee, such as those established pursuant to United Nations Security Council various resolutions. Different resolutions have been provided for designation and successor resolutions. So there is a local list, there is an international list as well. That international list is maintained by the United Nations Security Council. What is listing? Identifying the individual or organization subject to sanctions imposed pursuant to relevant UNSCR decisions of the sanctions committee or relevant decisions of the UAE cabinet, as the case may be. That's listing. Sanction list, I think by now we know, it is a list that contains the names of individuals and organizations who are bad, basically, terrorists or otherwise. Okay. Prior to the proposed listing, following need to be actioned. What? Number one, the council. From the council side, the council collects information about the person or organization proposed for listing. It communicates through diplomatic or established security channels with the country of nationality, works on providing the statement of information to the extent possible as per the consolidated form. So basically, the council performs their part They do the necessary information searching, research, analysis, etc. And they interact with the international authorities as well. The listing proposal. The listing proposal includes a detailed statement of the case to support the proposed listing. By the way, the UAE Supreme Council of Sanctions, where would they be submitting their proposal? To whom will they be submitting the proposal? Mohan, Kalma, you guys have any view? Has Ramsha joined?
Yes.
To whom are the, yes, Security Council, United Nations Security Council. So results and reasons showing fulfillment of the UNSCR listing criteria, evidence and documents, details of relationships with persons already on the list, etc. So basically that is the proposal. So the local council, UAE's council will make a proper case and then submit to the United Nations Security Council. Freezing funds as per the sanctions list and local lists. So if an individual or an organization is listed on that sanctions list, what happens? Their assets are frozen, basically. As any person shall, without prior notice, freeze funds as per the sanctions list and local list without limiting such measures to funds that may only be used to perpetrate a certain act. So all funds can be frozen. It's not that, okay, only 10% of this person's funds were being utilized in dubious activities, so let's freeze only 10%. No, 100% of the funds may be frozen. The freezing measures shall include funds owned or controlled wholly or jointly, directly or indirectly by the listed person, or funds owned or controlled wholly or jointly, directly or indirectly by a person or organization acting on behalf or at the discretion, direction of the listed person. So, other persons who are subordinates, even their funds can be frozen. Uh, Funds derived or generated from the funds under the above. So any proceeds of the above, they, wherever such funds are that can be controlled by a proposed sanctioned person, that those funds, it's no longer proposed. The person has been put on sanctions list, then his funds will be frozen wherever they are. Any person must notify the office of any freezing measures taken within 5 business days of the date of the freezing. So that's the maximum duration within which the local UAE authorities have to be informed, and the UNSCR also has to be informed. No person shall make funds available or provide financial or other related services, whether in whole or in part, directly or indirectly, to any of the persons or entities, except upon authorization from the office. Wherever they're using this office with a capital O, we should clarify this. I believe this was the office of the United Nations Security Council, if I remember correctly. Committee. So that's where they use the word office. Okay. Okay. Anyways, short on time. Let us continue going forward. So did we study these articles? No. Okay. Let us go through this. No person shall make funds available, this we read. In all cases, the rights of bona fide third parties shall be taken into account when implementing any freezing measures. So because a person has been sanctioned does not mean that anyone associated with that person will also be subjected to freezing of the funds. So innocent people or third party rights have to be protected. Article 16 says that implementation of the freezing measures pursuant to United Nations Security Council do not provide adding to the frozen account any interest, profits, or other payments due under contracts, agreements, or obligations. Do not prevent. Do not prevent. So if it could have been, these funds could have been invested. These funds could be in utilization or revolution. So any profits, etc., that will accrue, those will also be added. Article 17 provides for the implementation of a freezing order pursuant to United Nations Security Council resolution to be continued not to prevent the listed person or organization from making a payment due under a contract concluded prior to listing, subject to the office determining that the contract is not related to any prohibited item. If it was a genuine contract, if it was a genuine business dealing or otherwise, so that payment, the sanctioned person can still make and settle the obligation, as long as that is also not of a dubious criminal nature. The payment is not received directly or indirectly by any person or organization listed pursuant to paragraph 6 of UNSCR resolution. So the conditions of this paragraph 6 are not provided here, but we have to refer back to there. In general, it will still be the same, that the payment is not received, which will be of a criminal or questionable nature. There was previously a notification submitted to the United Nations Security Council, including its request to make or receive such payments, or to authorize the unfreezing of funds for this purpose. So for genuine purposes, even the moment the person's funds were frozen, the person must inform the UNSCR or the local authorities that, okay, my funds are being frozen, but I have certain transactions which are genuine, which have nothing to do with the criminal matters or anything. So, that notification will help the person to discharge one's obligations, genuine obligations. Moving to the next part, obligations of financial institutions and DNFBPs. You know what is DNFBPs? Designated non-financial businesses and professions. So what are the obligations of financial institutions? Financial institutions and DNFBPs, they have been actually defined by Financial Action Task Force as various, 5 categories are there for DNFBPs. We read yesterday. Can somebody recall or reproduce what were those 5 categories of DNFBPs? Who remembers? Ramsha? Ramsha, can you please recall what were the 5 categories of designated non-financial businesses and professions, DNFBPs, under anti-money laundering regulations and laws? Real estate brokers and agents, designated precious metals and stones, DPMS. First category, REBA, real estate brokers and agents. Second category, designated precious metals and stones. What was the third category?
I don't recall.
Anybody else? Independent accountants and auditors. Then the lawyers was there. Corporate service providers was there, right? These are those 5 categories. Okay, these 5. Now can you repeat what were the 5 categories of DNFBPs?
Real estate brokers,
Real estate brokers and
independent,
agents. That's one.
independent accountants,
And
auditors, lawyers,
designated precious metals and stones, DPMS, and what else? Corporate service providers. Okay, these are called DNFBPs. Remember this point. They are there is a separate set of anti-money laundering regulation for DNFBPs. These are non-financial. But what about financial institutions? The bigger part of money laundering happens in the financial institutions. Okay, that is why the regulation is much stricter there. So anyways, coming to what we were reading, financial institutions and DNFBPs, dealers in saleable items, etc., equal to or greater than $15,000, notaries, etc., or other independent legal professionals shall register on the office's website in order to receive notifications related to new listing, relisting, update, delisting, etc. of the sanctioned individuals and organization. They have to have that access to this list. Okay, so that they can highlight those transactions. Just a question here. If a DNFBP, there's a jewelry shop here, right? It's a DNFBP, right? A jewelry shop will be a DNFBP. Somebody goes there with a bag full of cash, 10 million dirhams are there in his big bag, big suitcase. And he goes to buy heavy jewelry and diamonds and whatever, right? What should the DNFBP do? They should let the transaction happen.
Then report.
And then they should file a report. What is that report called? Suspicious
Yes, suspicious transaction.
report, STR, suspicious transaction report. And but they do have to perform the screening check. That's why this first article is written here. They should always keep the list, keep their database updated. They should continue to search the names, whoever is transaction with them. Okay. Regularly screen their database and transactions against names on the list issued by the UN Security Council, Sanctions Committee, or the local list. And also immediately when notified of any changes. So we are, for example, if we are working with a real estate broker, people come to buy or rent apartments over there or houses or villas, whatever it is. This can be a measure or tool for money laundering, by the way.
Yes.
Right? So what should the real estate broker do? They should have that software in place, first of all. And they should run that individual or person name through it. Only then they should sell. And if there is any problems, let the transaction happen, but file the report. That's how they do it. Okay. Regularly seen in the database, and all these details they should check: customer base, name of the parties, potential customers, beneficial owners, right? So all of the detail, implementing decisions to lift freezing measures without delay. Immediately notify the supervising authority. What is that supervising authority? Usually it is the regulator, the registrar. The registrar. For example, in case of real estate, the registrar is the RERA, Real Estate Regulatory Authority. Supervising authority is RERA. In other normal businesses, it's the free zone, for example, or the Dubai Economy or Abu Dhabi Department of Economic Development registrars. Those government organizations which register the companies, this report goes to them first of all, and it simultaneously it goes to the Financial Intelligence Unit as well of the Central Bank of UAE.
Like the DFSA, the
Yeah,
regulator?
yes, DFSA as well. DFSA is the regulator for DIFC. So if a report is filed by a company which is registered in DIFC, the first person to see that will be the DFSA people. And simultaneously, because this Go AML portal is maintained by central bank will be looking at it as well, same time. Immediately notify the supervising authority. Identification of funds and actions have to be taken as per the requirements of the relevant UN Security Council resolutions. Detection of any match with listed persons or entities, details of the match data and actions have to be taken. If it was found that one of its previous customers or any occasional customers it dealt with is listed on a sanctions list, they have to take action immediately, inform the supervisory authority. If it suspects that one of the current or former customers has a business relationship with a sanctioned person listed, they have to inform. Not to take any action. See this? Clearly written, not to take any, because of the similarity of the names. So this is a key point here. Sometimes there can be a false positive. When somebody goes to an exchange house, you want to transfer funds from UAE to India, right? The person who's the exchange house, Wall Street or Al Ansari Exchange, what will they do? They will run the name, your name they will run, who's the sender of the money, and they will also run the name of the beneficiary, whoever you have told.
Yes.
And let's say the beneficiary's name has Dawood in his name, or Dawood Muhammad Ibrahim, let's say, right? The person runs the search and suddenly Dawood Ibrahim name comes up. Now that's a worldwide criminal. But you know that this is not that Dawood Ibrahim. It's a different Dawood Ibrahim, Dawood Muhammad Ibrahim. It's a different guy. This type of a mistake is called a false positive. So that false positive is corrected is noted in the system, and it's an IT system. Establishing and effectively implementing internal controls and procedures for such compliance. So SOPs have to be there with the DNFBPs as well as financial institutions. Establish and implement policies and procedures which prohibit staff from directly or indirectly informing the customer. That's a big offense. If you were sitting in the front desk of a jeweler, for example, or a real estate broker, we have certain clients who are real estate brokers, for example, the front office people have to be trained in this, that even if they find the name, they should not tell this to the customer that, oh my God, I just found your name on the sanctioned list. They should not tell them. They should maintain their composure, let the transaction happen. Because if you tell them, the criminal can get alert and they will take measures and they will escape, right? Informing the customer or any third party that freezing or other measures are in force. So that is for the government authorities as well, that even the governmental authorities should not divulge this information. No information should be. Cooperate with the office and the supervisory authority in verifying the accuracy of the submitted information. That was all about sanctions, okay? Sanctions list, etc. This was an AML topic, if you really think of. Anti-commercial concealment. What is the meaning of the word concealment? To hide something, right? We will get into about the legislation which penalizes a person in UAE and a non-resident when the person in the UAE facilitates concealment of a non-resident's participation in an activity in which the non-resident is prevented by UAE law from directly participating in. It's a classic example of corrupt politicians.
But all these parts, when they're mentioning this non-resident, is it in the point of view of tax or?
Both point of view. Here, until now, nothing related to tax has come in.
So it's based on the
Corporate
residential.
law of the land, civil law, commercial law, criminal law. Nothing has been addressed about taxation yet. Okay, what we are talking about is, for example, somebody is banned to do business in
Yeah.
UAE, or it is a sanctioned individual for that matter. Like certain nationalities are sanctioned nationalities, right? The North Korean person cannot, maybe they are not allowed to do that, right? Or depends, like from Afghanistan, it may be a big problem nowadays, or Iran, again, it's on a sanction list. But we should know that Iran is amongst the top 5 FDIs in UAE, top 5. But nonetheless, the point is that an individual whose name is on a sanction list and he wants to, throw money into UAE, what will that person ordinarily do? Can that person open a company in UAE? What will it do? What will he or she do?
To invest in a company that's already existing.
No, but how they will invest in that company?
Under someone else's.
Exactly. That's what is written in this first paragraph. That's the ultimate beneficial owner.
Yes,
That's why
yes.
UBO law is in place. So there is a vast majority of criminal arrangement in which the ultimate beneficial owner is someone else.
Okay.
Shareholder is someone else, but the shareholder is operating on behalf of the other ultimate beneficial owner. That's what is prohibited. Since penalties for both the concealer and the concealed are severe, it is important for us to know as auditors what will happen. So that is why UBO matter is a very high importance matter in the UAE, and we know that both from multiple, from Russia, from Pakistan, from India, so many criminal and corrupt politicians, they have funneled their monies into UAE, and how they are doing it by using other people as on the face. They are not on the face. They are not even shareholders. Shareholders are some other people, completely unknown people, maybe, right? Article 2, concealment of any foreigner is prohibited. Article 2 of the law provides that the concealment of any foreigner, whether physical or juristic person, is prohibited, and whether it is carried out by using the name, the license, the commercial register of the concealer, or by any other means for the concealed. The concealer is defined as every physical or juristic person who enables the foreigner. Concealer is the local guy, okay, the one sitting in the UAE, whether a physical or juristic person. It can be a natural person, it can be a company. The concealed is defined as any foreigner, whether a physical or juristic person, which carries out with the aid of the concealer any economic or professional activity prohibited to be carried out by him in UAE by the aid of the concealer. For this purpose, concealment means the process of enabling that foreigner to avoid carrying out any economic or professional activity not allowed to be carried out. So this is the act of concealment. Fines payable by the concealer. Article 3 says that without prejudice to anything more severe penalty specified by any other law, the concealer shall be sentenced to a fine not in excess of 100,000 dirham. Somebody is doing work on behalf of another person, a foreigner, then the penalty, the maximum penalty will be 100,000 dirhams. But if you read the first part of the sentence, without prejudice to any more severe penalties. So severe penalties can be applied. The fine shall be for each repetitive concealment, and in case of recurrence, the penalty shall be imprisonment of the concealer for a period not exceeding 2 years and a fine of 100,000 dirhams. The concealed person shall be liable to the same sentence together with his deportation from the UAE after execution of the penalty. The person may not have a ban, may not have a visa ban in UAE, but he may be banned from doing business. See, if that is the case, that person will be deported. Striking off from commercial register. This Article 4 provides that the result for the entity whose owner has been concealed is the striking off from the commercial register and cancellation of the license granted. In addition, in addition to depriving the person from carrying out this activity for a period ranging between 2 years and 5 years. 2 to 5 years is the range for restricting the person from doing that activity. The abstract of the judgment shall be published at the expense of the condemned or convicted person in 2 daily newspapers. One of them will be Arabic. This is a similar provision to before. Small and medium projects and enterprises. Let us go through there. Is any questions until now, Mohan? All
No,
good?
sir.
Okay. You're introduced to the okay, let's directly go to the articles of it. Article 2, objectives of the law. So, Federal Law number 2 of 2014 for small and medium projects and enterprises outlines the objectives. What will common sense tells you? It will be for the benefit of the SMEs, right? So, developing the projects of the enterprises, disseminating and promoting the culture of research, innovation, etc., coordinating the efforts of the concerned authorities to develop those projects, enhancing the competitiveness of the project, setting programs. In short, basically, empowering the SME sector. These are the objectives of the program. Article 3, classification of projects and enterprises. Projects and enterprises, in other words, any small, micro, or medium individual company or establishment carrying out an economic activity are classified by the council based on 2 or more criteria. What are those criteria? First of all, volume of employment. How many employees are there? Size of the annual returns, like what kind of revenue is this company earning? How much amount of capital has been invested? Cabinet may, upon the council's recommendation, add any other convenient criteria to the criteria given. So SMEs are defined by way of either employment or revenue or capital. Unified definition of SME. This is a very important aspect. The cabinet issues decisions on the unified definition of SME projects and enterprises upon recommendation of the council and after consultation with the concerned authority. So who's the decision maker ultimately? Cabinet of Ministers. Article 7, National Program for the Projects and Enterprises. So a program shall be established at the ministry under the name National Program for the Small and Medium Enterprises, issued by a decision from the UAE cabinet. So I think that program is already in force in UAE. Facilities and incentives, which is Article 10, the owners of the projects enterprises that are members of the program may benefit from the facilities and incentives offered by the public and private sectors, which are credit facilities, promotion and marketing offered by the private sector, commitment of the federal agencies to contract with projects and enterprises at the state at a rate of not less than 10% of the total contract. So, the national enterprises are under obligation to award contracts to SMEs up to 10% of the overall projects value. A commitment of the companies that the federal government owns not less than 25% of the capital thereof to contract with the projects and enterprises at the state at a rate of not less than 5% of the total contracts. So even involvement of federal government will be there, that federal government will hold 25% of the capital of such national program for SMEs, so that their active interest is there, and 5% of the overall contracts of the government will be awarded to SME. Simplification of the procedures and reduction of the fees of the license and usufruct of land for industrial or agricultural purposes. So that's the government giving support to SMEs, cheaper land, cheaper rental facilities, etc. Allocation of aggregate space in the exhibitions in which the state participates abroad to deploy the national products with the owners of the. Does anyone know the national DFI of UAE, Development Financial Institution? There is a bank which deals only with SMEs, small and medium enterprises. Who knows that? UAE Bank. This firm which is imparting this course, Mohan, the name of this firm is Shakir Zainal Chartered Accountant, and the owner of this chartered accountants firm is there in that bank. The name is Emirates Development. Okay, Emirates Development Bank is the national DFI of UAE. Okay, preparation of local specialized exhibitions, possibility of exemption of the projects, etc. Exemption of the projects and enterprises from the bank guarantee of the employed manpower. So a lot of facilitation is provided to SMEs under the law of SMEs of the UAE. Article 14, conditions of the facilities and incentive. For projects or enterprises to benefit from the facilities and incentives, they must be wholly owned by the UAE nationals. That's the first condition. And number two, member in the program. They should have membership in that SME program of UAE, and the project should be wholly owned by UAE nationals. So expats are not eligible. Article 15, obligation of the projects and enterprises. The qualifying projects and enterprises shall use the facilities and incentives for their specific purpose. Not change the project and enterprise or transfer its ownership to other person or another authority without the consent of the concerned authority. So, the SME owners will not make major changes into their business when they, unless it is for the better, when they become part of the enterprise. Commit to transparency and disclosure, and whatever information is asked, they will provide to benefit from the advantages provided to the SME projects. Penalties. Without prejudice to any severe penalties in any other law, every owner of the project or enterprise which violates any provision of Article 15 of this law shall be penalized by a fine not less than 85,000 and not exceeding 500,000. So that is the level of fine. If you violate the law, if you join the program, get the facilities, and then suddenly change your business or sell it, that will be considered a violation. Now we are coming to a different law, copyrights and neighboring rights. So
In this case,
you have a question? Yes, please.
what if the companies, when they registered for this plan or the incentives and things, after that a year or after 6 months, their SME status has changed, like they changed from the category of SME, their revenue increased, the turnover increased. In that case, also the penalty will come.
No, that's the objective of the program. If you really think about it, that's the SME graduating, right? So there's nothing said here, but I think if
Because it's a short period of time, will like the authorities think that they have been
no, absolutely not. To simply answer that, that's the whole point of this project, to convert SMEs into the larger organizations. If they start penalizing the growth or prosperity, then what is the point of running this project? So probably there'll be a different treatment, but or maybe they will graduate out of the program. That is possible. So, anyways, we are going to read about the copyrights law. You are introduced to the rights available to the authors owning copyright and neighboring rights, including but not limited to rights to income. Having this knowledge enables us to determine whether the entity being audited has properly accounted for the income from using intellectual property. The recently enacted Copyright and Neighboring Rights Law, Federal Decree Law number 38 of 2021, establishes the rights and provides certain intellectual property rights protection in the UAE. Protection of works. So this is the first article, Article 2. Works under protection. Authors of works and holders of neighboring rights are protected if their rights are violated within the UAE. And that protection applies to books, brochures, applications, lectures, speeches, theatrical work, music work, audio-visual, architectural work, any type of work that an author, creator, can do, that can be protected by the intellectual property law. Meaning of author. In this decree, the author means the person creating the work or the person whose name is mentioned on it, or if upon publication the work is attributed to him as being the author, unless otherwise proven. A person shall also be considered author if he publishes anonymously or pseudonymously work, or in any other manner provided therein no doubt as to the true identity of the author. So in short, right of the author are protected. Protection is not afforded to some works, which is Article 3. The protection is not available for ideas, procedures, working methods, mathematical concepts, principles, and abstract facts. Official documents, regardless of their original language or the language transmitted to them, text of law, regulations. Text of law, it's a government, it's a public thing anyways, so there's no protection as such. News and reports on current incidents and events of a purely informative nature, public domain works. So, information nature works or public domain works, this copyright law does not apply to all of this. So, but however, people need to register their intellectual property. So there's an Article 4 registration of the works rights. The implementing regulations regulate the registration of the rights to the work and dispositions made vis-a-vis them. And the registers of the ministry are a reference to the data of the work and its ownership. So there is a register basically. So kind of an IP register in which the right is registered for an author or a creator. The non-registration of work or the actions occurring in relation to that non-registration does not result in a breach of the protection or rights established by the decree law. If you haven't registered the work, it does not mean that your work is gone and lost. It doesn't mean that, does not result in breach of the protection of the rights. Moral rights. The author and the successor enjoys perpetual moral rights which may not be assigned. What are those rights? The rights of the author and the successor shall be the right to decide the first publication of the work, to claim the right of paternity over the work. Like, I have fathered this work, I have created this work. Prohibit any modification of the work if it distorts the work, or so author has full control on the work that he created, or submit a request to the civil courts to withdraw the work from circulation. The author can even submit to civil courts to withdraw the work from circulation if he feels that his work is being misutilized to the advantage of some other person. License to use the work. Only the author and successor or the holder of the author's right may authorize the use of the work in any manner whatsoever, namely through reproduction, including downloading or electronic storage, or any manner. So it's the author's discretion how they want to allow the use of that work. Okay. Renting computer software and audiovisual works. The rental right is not applicable to computer programs and smart applications unless the program is in itself the subject matter of the rent. So rental rights are not allowed to computer programs, but we have software as a service, as a stream of business nowadays. So you can allow a software, the right of use of the software to people. The whole world is running on that. Even now that we are doing this conversation, I have a right of use to use this Zoom software so that I can communicate with you. So that is allowed under the law. Economic rights. Transfer and licensing of the author's economic rights, which is Article 9. Author or successor may transfer to or license a third party, be it a physical or a juristic person, all or some of the economic rights, but the transfer is valid only if made in writing. So you can transfer the right to use. Author shall be the owner of the economic rights that have not been explicitly assigned. Consideration for the transfer of economic rights. So, okay, I created a book, for example, let's say, and I can give the right of the publication to another company, right? Wiley, for that matter, or Spicer and Pegler, or any book, Uh, so I will be paid against this transfer because it's an economic benefit transfer. The author or successor may receive remuneration in cash or in kind in exchange for transferring any economic rights to the work to a third party. The consideration shall be in the form of a share in the revenue resulting from the utilization of the rights on the basis of a lump sum or a combination of both. Usually, this is called royalty. So, books or other things like a movie or something, they have royalties. Licensing the economic rights to the works of smart applications, computers, etc. That's Article 12. The licensing of economic rights concerning the work of smart applications, computer programs, or database is subject to provisions of the contract received or affixed on the program. So when you download a program, it comes that please click OK if you agree with the terms of the terms of use of this software. If you click it, you have entered into a contract. So according to that contract, those rights will be governed. Exclusive economic rights of performance, which is Article 17. Performers shall enjoy the right to broadcast their unrecorded performance and communicate it to the public, fix their performance on sound recordings or audio visual recordings, reproduce their performance fixed on sound recordings or audio visual recordings, rent to the public for commercial purposes, the original or copies of their recorded performance. So all of this work, the performers can do. They can rent it to the public. They can reproduce their performance. They can distribute the originals or the copies. They can communicate the performance. So all of that is very much possible. Exclusive economic rights of producers of phonograms, which is Article 18. Producers of phonograms shall enjoy the following exclusive economic rights. Phonograms like audio, basically. What do you call nowadays? It's called uh, it's one thing is vlog, and there's another thing I forgot the name of it, but it's all audio usually. You can podcast. Yes, so podcasts are purely audio, right? So that's phonogram. Reproduce them in any manner whatsoever. Distribute it's not much different from the video that we have read. Infringing works and protection period. The following article describes the period of protection of an author's economic right. This is a very interesting article, Article 20. The author's economic rights provided are protected throughout his lifetime and for a period of 50 years thereafter, commencing on the first day of the calendar year following the year of his death. This point is an examinable point, so you should remember it. Entire lifetime plus 50 years. The economic rights of authors of joint works are protected throughout their lifetime and for a period of 50 years thereafter, commencing on the first day of the calendar year following the year in which the last surviving author dies. So that's a good idea to have a co-author. Maybe he will live long. The economic rights of authors of collective works without the artists um, of applied artworks are protected for a period of 50 years commencing on the first day of the calendar year following the year in which those works were first published. So artistic works, a movie can be a good example. So the works that were first published, after that 50 years, the rights are protected. Should the author be a juristic person or when a physical person, the calculation of the protection period shall be computed on the same basis. The economic rights of works first published after the death of the author are protected for a period of 50 years. This is a commentary, so no need for reading that. Actions to be taken by the court against infringing of the works. That's Article 35. For works published or displayed without written permission from the author or successor. So there is a penalty that's called infringement. What penalty will be there? Stopping publication, display, or production of the work, provisional seizure of the original or copies of the work, as well as on the material. So, authorities can seize that work from those perpetrators who were publishing or broadcasting the work without the permission of the owner or the successor. Preventing public performance in the form of playing, acting, or reciting a work to the public and preventing the going display or prohibiting it for the future. So, author or the successors have all the rights. Provisional seizure of the work from publication or display. Potential is to file a lawsuit with the civil court within 20 days following the issuance of the order. Otherwise, it shall be deemed of no effect. The petitioner is to file a lawsuit within 20 days of the order. So, if such an order is issued, the person who was doing that act can contest it within 20 days. Now we're coming to another topic called commercial register. What is commercial register? In yesterday's session and even before that, we read a word called National Economic Registry. Do you guys remember that? National Economic Registry. Can somebody answer who maintains that National Economic Registry? Ramsha, can you give this answer? Who maintains National Economic Registry? Ramsha, can you hear me? I think Ramsha cannot hear me. Mr. Reddy, do you remember who maintains National Economic Registry?
No, sir.
It's the Ministry of Economy. So all companies are listed on that economic registry. So let us go through this. There is a federal law, law number 37 of 2021. The purpose of the law is to establish a database at the ministry. When we say ministry, it means Ministry of Economy, containing commercial registered data, such as names, data of business entities subject to provisions of the decree law, and the commercial register. In other words, a database established at the competent authority in which the names of all the companies, etc., will be provided. Business licensing authorities in the UAE are, what are those authorities? Let us go through those. The mother authority is what? Ministry of Economy. Then we have DEDs, Department of Economic Development. Same name is in Abu Dhabi, same name is in Dubai. This Dubai economy is a short name, but the full name is Department of Economic Development Dubai, DED. Same, DED Sharjah, DED Ras Al Khaimah, DED Ajman, DED Al Quwain. But in Fujairah, the municipality does this work. Dibba also, municipality does this work. They grant registration to companies. Objective and scope of implication. Federal Decree Law's purpose is to regulate the uses of commercial and economic registers. Why do we need a database of the companies? Can somebody answer that? So that other parties can be protected. And even those companies whose names are there in the register can authenticate themselves when dealing with other companies or other customers or suppliers or vendors or authorities. So it's an authentication measure. Regulate the use of UAE commercial economic registers. In other words, a database established by the ministry, which includes commercial registers, etc., to provide an accurate and unified database for all the data on traders and economic activities licensed in the state and any updates and modification. So what is the scope of implementation? The provisions apply to every one carrying on an economic activity in the UAE. Different activities are there and other activity license. So how many activities are licensed in UAE? How many different types of activities are there? Companies subject to provisions of Commercial Companies Law. That's the mother law, Commercial Companies Law. Civil companies, taking one of the forms of commercial companies. These are older companies. When the commercial company law had not come, the origin, in old days, the companies were called civil companies. Usually, civil companies are for services, for professional services. Companies established by the federal government or local governments, or in which they participate in and that carry out economic activity. Companies and establishments in professional activities, commercial activities, branches and rep offices, etc., for foreign companies. And in the free zones, as a matter of fact, there is a full-fledged law on free zones in UAE, as well as sole proprietorships, which is natural one person's entities. The commercial and economic registers, establishment of the register. So there is a commercial register, there's an economic register. Let's go through. The commercial register is established in the competent authority. In other words, local government entity and free zone authorities competent to issue licenses to economic activities. So each free zone has a commercial register. You can, for example, if you open the website of the DIFC and search for the registry or register, you will find all the companies that are registered with DIFC. What about economic register? It will be similar. Economic register is established in the ministry. So the difference between commercial and economic register is that economic register is established directly by the Ministry of Economy at federal level. Commercial registers are subsidiaries. So it is they are with free zones or DEDs. Application for registration and access to registration data. So companies can apply to be incorporated. Once they incorporate, their name comes in the commercial register. So that commercial register has all the particulars: applicant's name, trade name, legal form of the company, type of activity, how much capital is there, etc. These are the particulars. Competent authority, after licensing requirements have been satisfied, decide on the application for the registration. And if approved, application is granted a certificate in his of his registration in the commercial register. Competent authority is to link and share the data and any change or update with the economic register, which is the national level register. So all the commercial registers, they consolidate or converge into economic register. Okay. Access to the registration data. Commercial or economic any person may access the basic data and documents registered in the commercial or economic register as specified with the implementing regulations. Now, UAE has a national economic registry. You can search companies there. Any person may request the minister or competent authority to provide an extract of the registration data in the commercial or economic register or any other specified data as per the law. Government entities can also access. So National Economic Register, NER. In practice, these two registers have combined to result in the UAE's National Economic Register, NER. Through this register, businesses can view online their business license, details with which the government has on record, and obtain instant information about their particulars. Now we are going to come to the law of bankruptcy. Objective of the lesson is to briefly introduce about UAE's bankruptcy workout and prevention law. There is a law number 9 of 2016. So this is the first law on bankruptcy to regulate the bankruptcies and prevention, including dealing with situations in which business may become bankrupt without correction measures being implemented. Let us directly go through the articles of that law. The provisions, Article 2 says the provisions apply to companies governed by the Commercial Companies Law, companies not established under the Commercial Companies Law, but wholly or partially owned by the federal or local government, and whose establishing legislations, memoranda of association or article of association provide for their submission to the provision of this decree law. So in short, this law of bankruptcy is applicable to private companies as well as government companies. Companies and establishments in the free zone, it even applies to free zone companies, which are not governed by special provisions regulating preventive financial composition procedures. Any licensed civil companies of professional character. So all companies, in short, all companies are covered. Financial restructuring. Based on the minister's recommendation, a standing committee called Financial Restructuring Committee can be formed under a resolution issued by the cabinet, which defines the work of committee and executives and procedural rules by which the committee is to work. So what would be the job of the Financial Restructuring Committee? Committee's functions are provided in Article 4. The committee oversees the management of the licensed financial institutions, financial restructuring procedures to facilitate reaching a consensual agreement between the debtor and his creditors. So, there can be situations where somebody borrowed money from a financial institution, huge amounts, hundreds of millions of dirhams, or even smaller amounts, and they were not able to pay. So what will happen is this financial restructuring committee will come into play. They will talk to the borrower, they will talk to the lender, and they will find out a win-win situation in which the debt will be restructured. Let's say previously it was 5 years. The committee will say that the borrower is almost bankrupt or is in a very difficult situation. Let's give him a grace period for, let's say, 1 year or 2 years, whatever the case may be, or change the installment size. They are not able to pay the installments right now because it's just too big. So change the number of years to 25, 20 years, for example. So all those matters, this financial restructuring committee can raise. Agrees to the work programs with the experts dealing with the restructuring, agreeing to the conditions and procedures, agreeing to the experts' fees. So all these matters are dealt with by the Financial Restructuring Committee. Now we are coming to the commercial transactions legislation. Federal Law number 18 of 1993 concerning the commercial transactions law. UAE Code for Commercial Transactions. Let's see. The first principle is that whatever is agreed between the two contracting parties applies to traders and commercial businesses unless the agreement conflicts with some mandatory commercial provisions. So this provision alludes to or indicates towards contracts. So there is an offer, there is an acceptance, then that contract has to be honored. The second principle is now these are very broad level principles. So this is a mother law of commercial transactions. Okay. We might have read the law of contract in India, Pakistan, and other countries. So here it is called the commercial transaction law. Second principle is that if there is no specific private agreement, the rules of commercial custom shall apply in any manner not covered by a provision of this code. So let's say there was a transaction, but no agreement was signed, then the common sense rules will apply according to the tradition, according to the commercial customs. Customary procedures will apply in other laws relating to commercial matters. The third principle is that if there is no relevant commercial custom, such provisions pertaining to civil matters which are not conflicting with the general principles of commercial activity are to be applied. There is another law which is called the civil transactions law. So if the business transaction or economic transaction or commercial transaction is of such a nature that there is no precedent available for it, then the guidance will be taken from the civil law to the extent that it does not contravene with the spirit. Fourth principle is that private agreements or the rules of commercial custom do not apply if they conflict with public order or morals. Yeah, I mean, you cannot enter into contracts which are harmful for public order. So that contracts by default become null and void. So we have another article, commercial matters. Commercial matters governed by a particular federal law shall be subject to the provisions of that law. And such provisions of the code are not as are not in conflict. So this is an enabling provision basically, whereby it is clearly identified that this law is basically a broad level guideline, but there may be specific laws. For example, the companies law, right? Commercial companies law. So any matters that are provided in commercial companies law, we have to first refer to that law. If no guidance is achieved, then we go to the mother law. Commercial business. Articles in this section deal with the commercial business and deemed commercial business. Let us have a look at it. So commercial business, the articles list the business deemed to be commercial business and which by definition are subject to the law. Federal law applies to purchasing commodities and intangibles, purchasing hire for commodities, renting basically, selling or leasing commodities, banking, money changing and stock exchange transactions, transactions related to commercial paper like debt instruments, etc. Businesses relating to marine or air navigation, all types of business basically, forward business, maritime aviation, employment, ships and aircraft, incorporating companies, current accounts, insurance, auction, all sorts of business this law applies to. Deemed commercial businesses, uh, for example, brokerage, commercial agencies, these will still be deemed as commercial business. Supply contracts, purchase or sale of land or real estate, land transport. So there are long lists available for all types of, but all of these are basically commercial or deemed commercial businesses. There is a ministerial decision as well that was issued in 2017. The UAE Federal Ministry of Economy has promulgated a ministerial decision number 539. Let us have a look at it. Unlike the provisions in the companies law concerning public joint stock companies, which are relatively more detailed because they are public joint, these are the biggest type of company. Their shares are listed on the stock exchange. The provisions relating to PJSCs in the ministerial decisions are general in nature and provide little by way of little guidance. Notably, Article 265 of the Companies Law provides that, save for those concerning public subscription, all provisions concerning public joint stock companies shall apply to PJSCs. Ministerial decision deals with board of directors, conflict of interest. So, proper board of directors should be appointed in a public joint stock company. Why? Because public joint stock companies offer their shares for open market purchase and sale. So their regulation is very huge, very heavy. So board of directors are the ones who are the stewards of that company. They drive the company. They appoint the chief executive. PJCs, conflict of interest. So it should not happen that there's a person who's the chief executive and his wife and kids are also given big employments disregarding the merit. That's conflict of interest. Related party transactions should not be there, etc., etc. And if they are there, they should be on arm's length and under transparency. Guidance on issued versus authorized share capital, share premium, treasury shares. So, it's guidance is provided on these matters as well, like what will be the authorized share capital, how much paid share capital will be there. If the shares are of a higher value than what is written on the share certificate, what amount of share premium are we going to obtain, etc., etc. If the companies can also have share schemes. What are share schemes? Employee share schemes. Sometimes employees are given kind of an incentive that if you do the job with us for 1 year or 2 years, we will issue you bonus shares, for example. So it can be employment share schemes as well. So or options are issued. Article 226 of the company law contemplated the issuance of guidance to detail the methods by which a company could implement an employee share scheme. So it is, in short, it is addressed in the company law. And that guidance was detailed in the ministerial decision. Now we are coming to the UAE company law. Let us go directly to the provisions of this. But so basically, we were introduced to UAE and free zone commercial companies legislation. We read about DIFC, we read about ADGM, we even read about the mainland company law as well. So that part we have already actually gone through, if you really think about it. This section of the model focuses on the UAE commercial companies legislation. It's a repeat if you really think about it. Let me go down. Let's see. Background. So the last version of the commercial companies law, last version, is 2021. Federal Decree Law number 32 of 2021. Okay. Ministry of Economy has confirmed that law intends to enhance the openness. So yeah, I mean, the law is there to improve the regulation of the companies. Most prominent amendment to this law includes eliminating the maximum and minimum percentage of the founder's contribution to the company's capital at the time of the public offering, cancellation of the legal limitation of the subscription period. So quite a few significant changes like regarding founders' shares, etc., have been made in the legislation. So the year we should remember, last version of the UAE Commercial Companies Law is 2021. That year we should remember. It can be examined. Objectives, Article 2. So it confirms that the decree law aims to contribute to the development of the working environment of the UAE's capability and economic positions. In short, how to improve the business, how to improve the regulation of the companies. Fundamentals of the regulation, companies governed by the decree law. So it can be UAE established commercial companies as well as foreign companies, branch, rep office, head office, etc. Companies which the decree law does not apply to, if I remember correctly, yesterday we read that. I think it does not apply to the government companies. Am I right, Ramsha? Yesterday, that's what we read, right?
Yeah, the company is fully owned
By the government. Save for the
by government.
renewal of registration in the exempt companies register at the ministry, authority, and the government authority. each within its own competencies, the provision of the decree law. Companies exempt. Let's directly read this. Companies exempt in the cabinet decision. So we did read that UAE Cabinet of Ministers can exempt a company, right, from application of commercial company law. So that's what is being written here. So the federal cabinet can exempt a company. Companies wholly owned by federal government. That's what we read yesterday. Companies in which the federal or local government has at least 25% of the share capital and operating in the field of oil exploration, extraction, refinement, etc. Companies exempt from the provisions of Federal Law number 2015. This is the earlier version of the Commercial Companies Law. Before 2021, the version was 2015. So if an exemption was granted to companies under this previous version, that exemption will stay. Companies exempt from the provision of the decree law by virtue of special federal laws. And then there is one more category. Special Purpose Acquisition Company, SPAC, a public joint stock company that the authority has approved to classify as a special purpose acquisition company. This can be a tricky, googly ball in your exam that, okay, which are the companies that are exempt from application of commercial companies law. So broad level, I think by now you should remember that, those companies which are wholly owned by federal government, those companies which are into oil sector, or and then there is this one as well, SPAC, special purpose acquisition vehicles, that the authority has actually approved as special purpose acquisition without any purpose. So and then we have special purpose vehicles as well. The company established with the aim of separating the obligations and assets associated with a particular financing operation from the obligation and assets of the person who incorporated it. You know why SPVs, special purpose vehicles, are set up? Companies require financing. So what happens is, if the company which actually requires that money, they directly acquire the debt, then God forbid tomorrow if they're not able to fulfill the obligation, then this bigger company will be either liquidated or control will go away. So what they do, they create a layer, extra layer. They set up a separate company that is called a special purpose vehicle, and then they transfer a lot of assets into that company's name. So and then they use that special purpose company, special purpose vehicle, to take loan from the banks. So the actual borrower in the books of the bank is not the original beneficiary, but a new company. This is a trick that the companies use. This is called special purpose vehicles, to which company law may not apply. Then we have in the same law, it has been mentioned that there will be free zone companies as well. And federal law by default does not apply to free zone companies. But if that free zone company is operating in the mainland, then the commercial companies law will apply. Right? Did we read this yesterday, Ramsha?
Yes, we did.
Yeah. So how does it happen? By default, commercial companies law does not apply to free zone companies, but to the extent that they are operating in mainland. Okay. Corporate governance and related obligations. Let us go through corporate governance as well. Okay, where are we? How much is left? Okay. Corporate governance. Notwithstanding the requirement of the central bank with regard to financial institutions subject to control and supervision, the finance minister shall issue decision regulating the governance. In other words, set of controls. What's your name? Mohan, when you were studying your chartered accountancy in India, did you go through the code of corporate governance there?
Yes, sir, one subject is the ethics.
Yeah. What about you, Ramsha? Have you ever come across this word code of corporate governance?
Yeah, I studied in PIPFA.
Hmm. So yes, so code of corporate governance exists, and usually the listed entities or the public companies, they are subject to this code. Um, in UAE, you can see that the public joint stock companies, uh, which have a board of director, they are like heavily regulated by the code of corporate governance, and Securities and Commodities Authority deals with it. So if you go to the SCA website, you can find the code of corporate governance there on the Securities and Commodities Authority. Governance decisions will be shall include the rules, controls, and provisions of the companies. So quite a few things are mentioned in the code of corporate governance. How what should be the character of what should be the capacity of directors? What do we do in case of internal audit? How when do we rotate audit external auditors? Too many things related to the proper governance of the company. Breach of governance rules. The governance decisions include fines determined by the ministry or the authority, each within its own competencies. Board members, managers, auditors. So they're providing that fine does not exceed 10 million dirhams. So up to 10 million dirhams worth of fines can be imposed because of corporate governance. That's a big amount of fine, and it is applied on larger companies, PJSCs, public joint stock companies. 10 million dirham. Remember this code of corporate governance or corporate governance. That's it. Definition of a company. A company is a contract whereby two or more persons undertake to participate. Yesterday, we read this exact same thing, right, in the commercial companies law. So that's what a company is. Somebody asks you, what is a company? Then the answer is actually it is a contract whereby one or more persons undertake to participate in the profit-making project and by introduction of their capital. And categories were also discussed yesterday, that commercial, agricultural, industrial, etc., financial. Different types of companies also yesterday we read. So this is all a repetition. I'm not going to go into this again because yesterday we've already read that. Legal personality also we read yesterday, that what rights are there for the companies when they become incorporated? What can those companies do? All things that are associated with natural persons. Remember this point? They can sue, they can be sued, they can own assets, they can have liabilities, etc. Accounting registers, what is the maximum time? Yesterday we discussed. What is the minimum time required for maintenance of records? Come on, guys. 5 years. Statute of limitation is 5 years. I can't hear you. What is going on? Are you guys there or not? I would appreciate Ramsha and Mohan and Kalma to keep your phones unmuted so that I can, get quick answers from you guys. We can recap, huh? Okay. Company accounts. So we discussed yesterday, company accounts will be full-fledged financial statements. Broad level, we have read, that we have to follow the standards. Every partner or shareholder can obtain a free copy, within 10 days at no cost, etc. This we read, yeah, approval by the board of directors. Company fiscal year, 6 months, 18 months. Yesterday we read, right? By default, 12 months. Minimum is 6 months, maximum 18 months.
Yes.
Profit and loss distribution. What was the provision regarding this, Kalama? What amount of profit can be distributed?
Upon the contribution, whatever share is contributed by them, by each of the shareholder.
Right. That's the ratio. Shareholding,
Yes.
the profit ratio of the shareholding, unless it is specifically provided in the memorandum. But what about the dividend capacity? To what extent the dividend can be distributed, Ramsha? What amount will be taken out of the profit while considering dividend? Something
I
related
don't.
We have to distribute only realized.
realized gains, correct?
Not a percentage, just the realized gains.
Only the realized gains can be distributed. And in case unrealized gains are also distributed, then there are fines, penalties, right? Distribution of profits, that's the thing. Okay. Types of companies also we read LLCs, right? Limited joint liability companies like the partnerships, limited liability companies, limited liability partnerships can be there, public joint stock company, private joint stock company. These are the types of companies. So joint liability companies are where partners are severally and jointly liable for the discharging of the liabilities. What is the capacity of the partners? The joint partners shall have the capacity of a trader and shall be deemed practicing commercial activities in the name of the company. The bankruptcy of the joint liability company shall entail the adjudication of bankruptcy of all the partners. So joint liability company is like a general partnership firm where all partners are liable. But limited liability company has a different situation. What was the limitation? Can you guys recall yesterday's example in case of a limited liability company? How much are the shareholders liable? Only to the extent of?
Their limit.
Mohan, the same answer you gave yesterday also, which was the wrong answer. And we discussed an example.
Unpaid.
This is the correct answer.
Yes.
The
Unpaid share.
shareholders will be liable only to the extent of unpaid amount on their share capital.
Yes.
Okay. The liability of the company, joint liability company shall be, okay, this we studied. Limited partnership companies, again, interesting structure. A limited partnership company, again, if the partners have contributed full amount of their partnership capital, nothing comes to them because limited LLP, limited liability partnership, it becomes a corporate body. It gets a separate identification, identity or personality. Capacity of a silent partner, any physical or juristic person may become a silent partner. LLC, that's the most common form of the company here. But if you go to the Ministry of Economy website, you will find that the maximum trade licenses issued in UAE are for sole establishments. And other than, because smaller, everyone starts small. Nobody immediately forms a limited liability company. First, they form a sole establishment. Once the business grows, then they can convert it into an LLC. So LLC we have discussed. What is the minimum maximum number of shareholders of LLC? Ramsha?
Maximum 50, like, yeah,
50 minimum. It
Two.
says 2, but there is,
50.
but there can be a single member company. Okay.
Like single sole proprietorship LLC.
Yeah, sole LLC. So it will be a single member company. That structure is also there and it is available. Managers of the company. Management of a limited liability company is undertaken by one or more managers as determined by the partners in the memorandum of association. Does a manager has to be a partner in the company, shareholder?
No.
No. Yes, absolutely right. Correct. Manager can be a non-shareholder as well. Liability of a company manager. This is a very dangerous article. So read it well. Every manager of a limited liability company shall be liable towards the company, the partners, and the third parties for any fraudulent acts committed by the managers, and shall also be liable for any losses or expenses it incurs due to abuse of power or violation of the provisions of the law. Do you understand this point? So managers are not entirely out of the gray area. So frauds, yes. Abuse of powers, yes. But errors, no. Any provision of the memorandum of association of the contract appointing the manager which conflicts the provision of the law shall be null and void. Subject to provision of the LLC, the provisions applicable to the board members of a joint stock company as set forth in the decree law shall also be applicable to managers of the LLC. So managers are vested with a lot of responsibility. Company auditors, LLC companies shall have one or more auditors to be elected by the General Assembly of the. See, I will tell you something. Nowadays, everyone is talking about only tax. Am I right? Everybody, whenever audit comes into picture, people talk about taxation. Yeah, qualifying free zone person is required to audit, or if the company's turnover is 50 million dirham, then they are required to be audited. That's the tax law, correct?
Yeah.
But what about company law? This Article 102, I want you guys to clearly remember forever. Article 102 of the Company Law, Commercial Companies Law of 2021. Does it, after reading this, do you feel that there is a choice available with LLCs to appoint an auditor?
No.
What is the meaning of this
Yes,
article? Clearly says limited liability company shall, and can you imagine when the legal provision uses the word shall instead of will, and it is a pronoun, third person. Third person normally comes with will, right? When we use shall instead of will, what does that mean?
that it's a must.
It's a must. There is no option. The limited liability company not will but shall have one or more auditors to be elected by the General Assembly of the partners every year. So if tomorrow in practice, when you are actually doing auditing or representing the firm or your practice or whoever talking to a client, you can comfortably tell them, sir, from a tax perspective, whatever tax law says, it says. Forget about the tax law. Company law also says that under Article 102 that the limited liability company, LLC, there is no option. You have to appoint the auditor for an LLC and get it audited. Otherwise, it will be non-compliance with the company law, not the tax law, but the company law. Clear?
Yes.
Public joint stock companies, PJSCs. Article 105 is a company whose capital is divided into equal and negotiable shares. Founders shall subscribe to the part of such shares, while the remaining shares shall be offered to public subscription. So after founders, when the company is listed, those shares are available for public trading, okay, on the stock exchange. Term of the company, usually it is unlimited. The term shall be determined by the memorandum, or the life of the company, how long this company will exist. It is identified by the memorandum, or if it is silent, it means it's a perpetually existing company. Formation of the board of directors is addressed by Article 143. It says that the company has to have a board of director, and the detailed method has been identified there. The board of directors elect from amongst its members by secret ballot a chairman and a vice chairman. So chairman is just a director itself. A managing director may be elected and he may not be a chief executive officer or a general manager. He may not be a chief executive officer or general manager of another company. So the CEO or the general manager can be elected from the director itself. Usually in other company laws of the world, usually the CEO is also represented on the board of directors. The board shall notify the authority of the decisions for electing the chairman, vice chairman, etc. Okay, what else? The central bank also has the similar regulations. So now we're coming to the auditor's roles, functions, and responsibilities. Let us quickly go through that. Auditing of the accounts. I think yesterday also we read the auditor's report has to be provided within 4 months of the end of the fiscal year. That is a provision of the company's commercial law. So around the world, as per ISAs, the duration is 6 months. But as per the company law in UAE, you have just read that the duration allowed is 4 months. The company shall provide the authority and the competent authority a copy of the account and the auditor's report within 7 days from the date of convening the General Assembly. Duties of the company's auditors. So they will inspect, they will do their audit, they will look at the balance sheet, profit and loss. They are not required to prepare financial statements. It is the company's responsibility, by the way. When they're preparing the audit report, they will validate everything. They will look at the consistency of information from year on year. Auditor may also verify the company's assets, rights, etc. As a matter of fact, auditors even look at the legal compliance, the compliance with laws and regulation. Okay. Confidentiality. Auditors shall keep the information confidential. They cannot divulge information without express approval, but by an action of law, yes, auditor can provide information. Prohibition of auditor trading in securities. Obviously, that's a big, huge conflict of interest. If you have ever worked, any of you have ever worked in a Big Four, when they're sending a team member to audit a listed entity, they have to sign a declaration that we or our spouses or dependents, they don't own any shares in this company. And if they do, they cannot be sent to the audit. They have to, discharge the share. Notification of crimes and violations, Article 251. The auditor is to notify the authority of any violations of the provisions of the decree law. You see, compliance with the company law is provided. There's an opinion on the compliance with the company law also that is provided. And if they observe violation, within 10 days of detecting the violation, they have to inform the authorities, SCA, Securities and Commodities Authority. Failing which the authority may suspend the auditor from auditing for no more than 1 year. If they fail to do this job, 1 year ban. Contents of the auditor report. So I think we know the contents, but one point to remember, among everything else, like opinion on the financial statements, company has books of accounts, records, etc. The last part is very important, that the compliance with the laws is also part of the scope of the auditor's report. And the opinion is also provided. Liability of the company auditor shall be liable towards the company for the audits and validity. So if they have done their job poorly, they can be fined. Heavy fines are there. Liability lawsuit against the company auditor. Liability lawsuit against the auditor of the company shall be time barred upon the expiry of 1 year from the date of convening the General Assembly at which the auditor's report is read. If the act attributed to the auditors constitutes a crime, liability lawsuit shall not be time barred. If there is a crime, if in case of error after 1 year from the General Assembly, auditor cannot be charged with a negligence. But beyond that, if there is a crime like that has happened in UAE in certain cases, auditors kind of colluded negligently, then negligence is a crime. So in that case, this time bar shall not apply. PJSCs, public joint stock companies. Okay, let's public joint stock. Where is that? Sorry, private joint stock companies. Now, what is the difference between public joint stock company and private joint stock? It's a company with the number of shareholders not less than 2, and with capital divided into shares of equal value to be paid in full without offering any shares for public subscription. Their shares are not traded. Their shares are not offered over the counter in banks or other places. It's a private joint stock company. Shareholder shall be liable only to the extent of his share in the capital of the company, and that is also unpaid share. All things are similar in this as well. The only difference is that their shares are not traded on the stock exchange. So for private joint stock companies, share capital cannot be less than 5 million dirhams. So these are relatively larger companies. and shall be paid in full with the limit being modified by, limits can be changed by UAE Federal Cabinet decision. Uh, Holding company. A holding company is a joint stock company or a limited liability company. Holding company structure is very, as a matter of fact, an offshore company can also be a holding company, and that is also a limited liability company. Investment fund. Investment funds are established according to the conditions and controls in a decision issued by the authority. Licensing of investment funds issued by the central bank before the date of entry into force of the decree law shall be excluded. So investment funds, sometimes they can be formed as a company and sometimes not, just to let you know. So investment management companies set up these funds. Legal personality of the fund. The investment fund shall have an independent legal personality, legal form, and financial liability. This we should remember that if the investment fund is formed in the mainland, then it will have a separate legal personality. This is Article 274. Those which are non-juridical investment funds, they are you can do that in DIFC and ADGM. Foreign companies, we remember foreign companies as branches or rep offices, right? So rep office, yesterday we read, they can only do market research, etc., production capabilities, nothing more than that. Control and inspection of company, who does that? For banks, it is the central banks. Insurance companies, central bank. Exchange houses, central bank. Anything which is a financial institution, it will be dealt by central bank. Or otherwise, there can be other bodies as well who can control and inspect. Like for real estate companies, RERA will do this. For other companies, Ministry of Economy will do the inspection. So there can be an inspection committee that may seek assistance. Inspectors have a lot of power. Inspectors may request their own discretion, any information from any officer, and that has to be provided. So quite a few crimes and penalties are there, providing false information. So there is a penalty of 6 months up to 3 years and minimum 200,000 to 1 million dirham. So that's false information or both. Overvaluation of the contribution. Remember this in-kind contribution, shareholder bringing in car, Ramshah's example.
Yeah.
So minimum 6 months, maximum 3 years. And minimum fine 200,000 dirham, maximum 1 million. If you look at this, 1 million, 1 million, 200, 200. Similar, right? Same. Distribution of profits or interest in violation of the decree law. That unrealized profits also distributed. So minimum 6, maximum 3. But here the fines change. So not less than 50,000, not more than 500,000 dirham. Here it was 200K and 1 million. Okay. Concealing the true financial position. What is the penalty? 6 months, 3 years, and 100K to 500K. Previously it was 50K, right? This was for concealment. This was for wrong profit distribution. For concealment, the minimum penalty is higher, 100K. Maximum is the same. False data in the inspection report. So if the inspector who was appointed by the ministry, he provides false data, then 3 months to 2 years imprisonment, or minimum 10K fine and maximum 100K. So, similar, too many other fines are there. Let's not go into all of the fines. There can be further, penalties as well. Let us go to Securities and Commodities Authority, SCA. So in Pakistan, it's called Securities and Exchange Commission of Pakistan. In USA, it is called Securities and Exchange Commission. That's it. I forgot the UK one, but what is it called in India, Mohan? Are you there, Mohan? Can you please unmute? Okay, Mohan cannot hear us for right now, I think. So, but anyways, so Securities and Commodities Authority is responsible for the code of corporate governance, regulating the larger, PJSCs and private joint stock companies, larger bodies. This was established under FDL 4 of 2000, Federal Decree Law number 4 of 2000. So the structure is there, a chief executive is there, board is there, etc., etc. Corporate governance and board member discipline. That's the key point, key role of the Securities and Commodities Authority. So their framework, their regulations provide for institutional discipline standards and general provisions. So they take care of the corporate governance, appointment of the board of directors, senior management, executive management. They take care of the shareholders' rights and they protect it. They guide on how directors, managers, auditors are supposed to operate. All of that is part of the code of corporate governance. Formation of the board of directors, as we read earlier on as well, it is clearly identified in the memorandum. A company has to have a board, and when the government owns 5% or more of the company, it may appoint person to represent its own it on the board with the same proportion to the members of the board, and with minimum of at least one member of the ratio required to appoint a member. So, in short, government when government owns 5%, it can appoint at least one member of the board. Taking account of the convention and treaties entered by the UAE, the chairman and the majority of the board of directors must hold UAE nationality. For these larger PJSCs and PSCs, it has to be UAE nationals who will be part of the board. So naturally, board always passes resolutions, and through resolutions they run business. It's not a day-to-day business usually. Board meetings are held, and that's how they monitor the performance. They hand over the decisions of for management. Chief executive can forward bring to the knowledge of the board. The company secretary can bring matters to the knowledge of the board, and they resolve it. So critical matters they address, give their consent, pass resolutions. That's the role of the board. Company has to disclose related party transactions. They have to, protocols have to be followed to ensure transparency. What are related parties? They are those people who can influence the business of the company. Why? Because of their close relationship with the decision makers, with shareholders, with the CEO. They are related. Or they can be, a parent company of the company that we're talking about, or subsidiaries, etc. They're all related parties. So related party disclosures, it is a must. It will be there in the board of directors report as well, and it will be there in the financial statements as well. There are standards on it. IS 24 related party disclosures. Opinion of an external consultant. Sometimes for various matters, board can appoint external consultants as well. For valuation of investment property or any other, there is a grievance, experts can be appointed, and board is the one who will take the decision. If any provision stipulated in the decision is breached, the authority may impose the following penalties: a written warning to the company and board members, monetary fine not to exceed the maximum limit stipulated in the company law, referral of the breach of public prosecution, referral of the breach to the public prosecution. This is the muscle of the government. Public prosecution office, they enforce the law. So they can drag them to court. So in short, board has to be very diligent in discharging their responsibilities. Corporate governance guide. So there is a full-fledged guide issued by the Securities and Commodities Authority, and that guide contains all the guidance on internal auditors, external auditors, appointment of board, running of the company, transparency, sharing information, awareness as well, set of controls, The guide consists of set of controls and rules intended for institutional discipline. Accountability. So remember this point, examinable point. Okay. Accountability, equity, transparency and disclosure, and responsibility. Now, what is accountability? Common sense. Board is accountable for running the company. They have to give answers to the actions that they perform. Equity. Company obligates itself to protect shareholders' rights, ensure fair treatment of shareholders. Minority interests sometimes are really compromised in the company. Minority rights have to be protected. So that's equity. Transparency and disclosure. Company intends to ensure accurate and timely disclosure for all material matters of the company. You have to let the shareholders know immediately, or for that matter, other people know. Responsibility. Company recognizes the rights of other stakeholders and encourages cooperation between the company and stake. When you read the word stakeholders, what does that mean? Does it mean only shareholders? No, it means creditors as well. It means employees as well. All of them are stakeholders because they are affected because of the company. So these are all the different areas which the code of corporate governance addresses. This guide is on code of corporate governance. So developing the framework to address running of the board and executive management, strengthening the role of the board, ensuring transparency, neutrality, etc., etc. So responsibility for implementing the code of corporate the corporate governance guide. The board is responsible to let everyone know about the corporate governance. The board is responsible for maintenance of documents as well. All necessary documentation, resolutions, financial records, financial statements, board of directors report, all of this document maintenance, etc. All that culture is also responsibility of the board of directors. Rules for auditors and firms. Now we're coming to how the audit profession is regulated. So first of all, we need to remember how the audit profession is regulated. There's a law basically issued in 2014 regulating the audit profession. Let's quickly look at it. Federal Law number 12 of 2014. That's regarding the reorganization of accountants and auditors profession. So the law establishes the function and procedure of the registration, how to register, obligations. So this law basically comprises all the how the auditors must behave, how to interact, and any possible crimes that they may commit have been addressed there as well. There is another, after 2014, a cabinet resolution also came in 2016, and that resolution gave further guidelines. It also lists the conditions for notifying any amendment or change to a registration, training conditions. So audit firms have a training program for their employees. Usually they have to have a clear guideline for how they are training their staff. So it has to be maintained, and any change has to be informed to the Ministry of Economy. Then again, another federal decree law came in 2019. An amendment was made to the original decree law of 2014. And what happened under the amendment, the federal law was replaced with a new article, Article 4. The executive bylaws shall stipulate the necessary conditions and guidelines for registering natural persons practicing the profession in the auditor's registry. So that's a beautiful point. Natural persons can be registered in the auditor's registry. What does that mean? A sole establishment. Auditing companies and firms undertake to implement the training programs. So auditors can be natural persons as well. Sole establishment can be set up as an audit practice. What is the next thing? Auditors standard. So concerning the international standards on auditing. So that is issued by International Federation of Accountants, right? So International Accounting and what was that? Auditing Standards Board, IASB, I think. Audit and Assurance Standard Board. Article 2 of the resolution requires an auditor to implement the International Accounting Standards issued by the International Accounting Standards Board, behavior and ethics. That again, it's an ethics board, International Audit Quality, ISQC's International Quality Standards, and IFRS, International Financial Reporting Standards. Auditors must be expert in that. So there can be crimes that are committed by the auditors. That has been addressed in the ministerial resolution of 2016. So any violations committed by auditors, omitting auditor's name, there is a 20,000 dirham fine. Okay, while you issue the report, name has to be there by the auditor. Improper display of certificate of registration. When you enter an audit firm, the registration of the auditor should be there. If you have not displayed it, 20,000 dirhams fine. And again, multiple fines as well. Omitting auditor's name from address of the firm, again, that will also be a violation. If the auditor's name is not used as a basic element in the address of the firm or the company, in the case of multiple partners, the name of at least one of them shall be mentioned. So name has to be clearly mentioned. AD 80,000 fine is there, and 20,000 for multiple violations. So failure to verify details, my God, again, 80,000, repeat. So you can imagine if you want to start an audit firm here, Mohan, look at the fines for the auditors. Ministry of Securities and Commodities Authority, if the auditor fails to comply with the rules of behavior and ethics, 60,000 dirham fines. And multiple violations, again, 60K each. Failure to comply with the rules of ethics and governance regulation, 60,000. This is a repeat. Failure to keep records for the required time, minimum time is 5 years. If you don't maintain records, 50,000 dirhams fine. Failure to provide information on audited accounts, 60,000 dirhams worth of fine. So, you issue an audit report, you have to have full-fledged information available. What did you audit, right? Failure to sign for audit proceedings, again, there is a fine of 50,000 dirhams. So that's how it is. In all cases, maximum reconciliation amount for every time shall be a sum of not more than AED 100,000, even in the case of multiple violations. This is a key point for us to remember. Okay, what else is there? Regulating, okay. This is a recent development. Certain definitions were added to the definition included in 2014 law. That happened recently through a cabinet decision 2022. So fellowship certificate. This certificate is needed in order for anyone to practice law or practice the auditing profession here. This paper that you are studying right now, this is part of that certificate. If you have gotten a grip on this paper, then other 2 papers are also there. 3 papers in total you have to pass. Register. Any of the auditors registers stipulated in the decision which are established at the ministry to record auditors in accordance with the provisions of the law. So there is an auditor's register basically that is maintained by the Ministry of Economy. There is an auditor's e-program as well, an information system in the information network prepared by the ministry to process, manage, and store electronic information related to service of auditors. Now we're looking at the auditor's register. So it's any register, be it commercial register, economic register, auditor's register. Usually you will have all the things over here. Physical auditors practicing the name of the auditors, trainees, jurisdic auditors, branches, everything. Where are the branches? Who are employed there? Practicing and non-practicing auditors. Register for the practicing and non-practicing auditors and trainees are to be populated with auditors, all the particulars basically, qualification, phone number, email addresses, etc. Register of jurisdic auditors in case there is an LLC. This was individual, like sole establishment. For jurisdic auditors, again, you have to provide similar details but this time the company's information will also come into play. Nationality of the firm, if it is a foreign firm, like those multinational companies, EY, PwC, etc. Register of physical practicing and non-practicing auditors. Conditions for registration in the register of auditors. So, in order for an auditor to be registered, they have to be fully qualified. They should hold ID card, good conduct certificate, minimum of bachelor's degree, fellowship certificate. All of these conditions. Practical experience of no less than 5 years since obtaining academic qualification. All of these conditions have to be met. Additional conditions. So non-UAE national, additionally, a physical person who's not a UAE national is required to have practice experience in auditing in the UAE for 1 year, 2 years, 1 year if the person's experience outside the UAE exceeds 10 years, 2 years if the person's experience outside the UAE is from 5 to 10 years, and 3 years if that experience is from 2 to 5 years. So different, conditions are there. Various documents will be provided, fellowship certificate, ID card, etc., particular colored photograph. Documents for transferring registration in the register of physical non-practicing auditor. When transferring the registration to the register of physical non-practicing auditors within a period not exceeding 30 days from the event, resulting in the person ceasing to practice, the application must be accompanied by a letter from the. You don't want to practice, you have to inform the authority. You have to send a letter that I am no longer practicing. Certificate of registration or renewal of the registration in the register of physical auditors. That also you have to provide. Re-registration into the register of physical practicing auditors. Then again, you have to submit an application, you have to fulfill all the conditions, etc. Upload all the documents that are required. So there is a register of juristic auditors as well. Similar things will be required, similar conditions. 5 years experience is commonly required. What else is there? Registration of foreign companies. So again, common sense basis answers are there. That foreign company will provide a letter confirming the commercial registration department has no objection. Memorandum association, parent company certificate. So all of those particulars will be provided by that foreign multinational company. Approval, renewal, and notification of the change of auditors. So, certain procedures apply. Let us have a quick look at it. So again, application will approval of the application, Article 10. Once the auditor's application to enter the name has been approved, registrar will notify the applicant of the approval, applicant of the registration fee. This much amount of fee you have to pay. Applicant signs that undertaking. The issuance of an electronic certificate from the ministry, issuance of electronic certificate stating the name of the auditor. All of these things will be done. Renewal of registration in the registers of auditors. So, renewal of registration, again, valid edit, all the documents will need to be provided. Fellowship certificate will need to be provided. Notification of the modification of change. Any major modification comes to an auditor's registration, the data. So we have to inform the ministry immediately during the period of validity of its entry in the ministry's registers, making changes to the data within 30 days. It's the Ministry of Economy's responsibility to update the record. You were saying something? So these are the actions that the ministry will perform. They will update the records, they will inform the auditor. Trainee auditors, entry of a physical person in the trainee register. So you can enroll trainee auditors, and you have to training programs are intended to cover financial accounting, tax accounting, external audits, internal audits. All of these things are covered in the training program. So judicial audit and programs must be intended to improve the auditor's knowledge and familiarity with the various legislation. Judicial audits, like for example, Shakir Zainal Chartered Accountants is there with the Ministry of Justice as well, registered. So quite a lot of legislation would come into play. Financial statements, audit standards, all of these are required. Professional indemnity insurance is also required. Insurance against professional errors, which is an indemnity insurance, that is needed so that tomorrow any claims come in, you can meet those claims. Okay, I think what else is there? Necessary controls for keeping registers, files, and data. Auditor must establish all those practices to maintain the data properly, maintain the confidentiality of information, inform the ministry. So, because auditors have a lot of confidential information on their hand, so they cannot risk it. So, the control procedures should be there. There is a disciplinary board as well. And in case violation has happened, that disciplinary board, which will comprise of a chairman and 3 members, they will decide upon how to deal with that. So they have a quorum, board has a quorum consisting of chairman plus at least 2 members. They decide on what to do with the violation. They have to provide the decision within 15 days from the date of its convening. Knowledge check. Okay, guys, please unmute yourselves and help me with the answers. Select the answer. The dash oversees competition and consumer protection. Through which one? Ministry of Economy, competent authorities, Ministry of Finance, Defense. I think it should be economy, right?
Yeah.
Ministry of Economy.
Um,
Yeah, so I think
yes.
it is also giving this answer. Right. Okay. Select the correct answer. Mr. Mohan,
Yes.
exporting products to UAE at an export price lower than the ordinary value of a similar product in the exporting country. Don't you remember? I think this was dumping, right?
Yes,
Yeah,
dump.
this is done.
Okay, good. Let's go to the next one. Joint stock companies corporate governance guide is based on the following principles. How many principles were there? 4, I think, right? There was
Accountability,
there was
equity,
Then
transparency and disclosure,
and
and response.
responsibility, right?
Yes.
Let's see.
Okay.
True and false. As an exception to the minimum number of shareholders, a juristic person may not incorporate and own all shares in a private joint stock company. Why? Private joint stock company can be owned by a juristic person. All shares. So what was PJSC? How many minimum shareholders were what?
Two
Ah,
required.
minimum were 2 required. Okay. But it's a private company.
That was for public.
Huh? That was
250 was for public.
public. I think private joint stock company can be fully owned by a juridical person. I think. So this
Yeah.
part is wrong. So let's go with the false. Let's see. Yeah. In case of public too, yes, I remember. Select the correct answers to complete the statement. Business can view their business license details online via, that answer should be easy, National Economic Register. 2-3 times we've discussed, right? This is the register. This should be the correct answer. Yeah. What else? Business licensing authorities in the UAE are Ministry of Economy was there, I remember. And then all the DEDs were there. But DED, Abu Dhabi, Dubai Economy, we said this is the original name is DED Dubai. Then DED Sharjah, DED Ras Al Khaimah, DED Ajman, DED Quwain. And yes, In Fujairah and Dibba, we said municipality does this. So all of the above, right? Okay. UAE introduced Dash to regulate bankruptcies and prevention, including dealing with situations in which a business, this is a test of memory, which in a deal situation in which a business may become bankrupt without correction measures. So, okay, imagine a situation that you are sitting in the exam hall of the British Council, and this question comes in, and it is a test of memory. What trick will you use to
2006.
Huh. How did you use this? How did you come to this? Kalama, do you remember already?
No, I remember that it was federal, not a cabinet decision. Then it was
So,
not
A or B, maybe A or B, sir.
sorry, say again.
Both. Either cabinet decision 2020 or federal decree 2016 in
was
between.
not a
No, it cannot be a cabinet decision, no, because cabinet decision is after the law, and it says introduce this to regulate bankruptcy. So, it has to be a federal decree.
federal decree.
Huh. So,
Yeah.
this thing is gone. So,
Second only, sir.
it is 2006.
you know,
Very-
if I don't remember, I will use another trick. I will think of the legal, I will think of the importance of the matter, because this is bankruptcies. Don't you think bankruptcies would be there even in, 10 years before?
Yes.
So the oldest federal degree law I will choose.
Yes.
Bankruptcy is naturally, I mean, this matter cannot be ignored. So must have been a law. So that's why I will select 2016, even from a, yeah. So there you go. Now, select the correct answer. The management of a dash is undertaken by one or more managers determined by the partners. Management can be management of a dash. So So here are the types of companies. So is undertaken by one or more managers determined by partners in the memorandum of association, and where the managers were elected from partners or third parties. So yeah, so managers can be outside as well. And who decides on the manager? The partners decide, right? So this terminology partner is not there in case of what do you say, public
Public
or
and
private.
private use.
So these two are gone. What is left is this and this: joint liability company and limited. And I remember that managers were not appointed in case of joint liability companies. So it has to be
Yeah.
limited liability companies, right?
LLC.
Yes.
What is joint liability company? That was the general partnership category. Yeah, correct. Let us look at the ninth one. If the auditor fails to verify truth and correctness of the details mentioned in negligence, basically, a fine of 80,000.
80,000.
80,000 fine. True or false? Under the Federal Decree Law number 17 of 2004 concerning combating commercial concealment, you remember the foreign person using another shareholder in UAE. So the fines payable by the concealer will not exceed 100,000 dirhams. Is this true or false?
True.
True. It will be true. So that looks like all of our answers are true today. Wow. Perfect. Okay. Great. Thank you very much. Tomorrow, inshallah, we will convene, and Kalima will share the summary of what we have read today, inshallah. Okay, guys. Thank you. Bye-bye.